In a previous video, we introduced and discussed the measures of money. We said that, the difference among these measures of money is the liquidity of monetary assets covered, right? And liquidity, once again, the examples from our real life could be cash, okay, the green pieces of paper in our pocket. These are the most liquid asset, right? Because it can be spent next second. And then we also have, as we said, the money we put into our saving account, or even stocks and bonds, treasury bills, right? These are also very liquid asset, but not as liquid as cash, right? And so we also have other, monetary assets or financial assets, and we also have, for example, cars, okay, real estate investigation, okay, land, houses, jewelry. Okay, you would find these assets are less liquid than what we mentioned before, right? So if we desperately want to use money, we can still, put them on the market, get them sold, and get, the cash or other liquid assets back, right? So again, the liquidity is, it measures how readily or easily that asset can be converted to cash. Okay. Now here, let's check out another measure of money. It's called monetary base. It is similar to M1, but not exactly the same. Okay. Monetary base is a very important tool for monetary policymakers to follow or understand how much money is circulating in our economy. Okay. Now let's check out the overtime evolution of this measure. Okay, I'm pulling this out from FRED, okay, Federal Reserve Economic Database, and for all kinds of monetary assets or money-related data, FRED is the most official place or source to get the data. Okay, as we said before, like GDP, unemployment rate. FRED actually got it from somewhere else, right? Other government branches or agencies. For example, GDP is from the Bureau of Economic Analysis, and unemployment rate is from Bureau of Labor Statistics, right? So it's not FRED, or Federal Reserve's own data, but the money-related measures, that's their own data, okay? So as we can see, from this one I'm pulling out is from 1980s all the way to this year. Okay? And what you find is, from 1980 all the way to 2007. Okay, so right before the outbreak of the previous financial crisis in 07-08. You find that this measure, the monetary base, grew at a pretty constant rate, okay, very stable pace, right? So that means over time, we do have more and more money circulating in our economy. That's because we produce more and more goods and services, right? And then in 2008, 2009, as a response to the worst financial crisis after World War II, the Federal Reserve tried very hard. Okay, so you can see these kind of staircased ones, like this one here is called the Quantitative Easing Phase 1. Here is a Phase 2 and Phase 3. Okay, or we sometimes say QE1, QE2, QE3. Okay? Quantitative easing simply means the Fed print a lot of money and pump them into our economy in the hope of keep the liquidity going and help the economic recovery. Okay. Now, if you focus upon the value, you would find that right before the financial crisis of 07, 08, the economy had approximately $850 billion monetary base, right? So I'm talking about this point. It's below the $1 trillion, okay? And then because of the QE1, 2, and 3, and we eventually end up above $4 trillion. In other words, the monetary base increased by more than 400%, okay? Or approximately 500%, right? Because before it was 850 billion, and the peak value, which appeared in 2014, was about $4.3 trillion. Okay, and then after that, because Federal Reserve held a lot of monetary assets. Okay? So when they pumped the new money into the economy, they actually used the money to purchase the assets, okay? Like the treasury bonds and the mortgage-backed securities, okay, from the commercial banks. And then they start, getting these assets sold, okay, because the economic recovery, was going well. So they figured, we probably don't need that much money in the economy. Otherwise, we may end up with pretty high inflation. Okay, so they start reduce the amount of money, and we find that, in 2018, 2019, monetary base shrunk to like $3.4 trillion. It's still way above the level, the pre-crisis level. Okay, and then after that, we saw the pandemic, COVID-19 crisis, and this time the Fed tried equally hard. Okay, so we find that the monetary base shoots up even above $5 trillion. Okay, now this would made some people out there super worried about hyperinflation. Are we heading to hyperinflation? That means extremely bad inflation, right? Now, to be able to talk about the possibility of the U.S. economy heading into a hyperinflation, we got to talk about who controls our money supply, right? Which is the Federal Reserve. So here, let's briefly talk about the Federal Reserve System. Okay? And the Federal Reserve System is the central bank of the United States. The central bank means it's bank's bank. Okay, and for this brief introduction of the Federal Reserve System, I would assume you guys, other than checking out these lecture videos I made, you also need to read the books, the textbook, okay? And you probably could even go back to your intro level textbooks where you can find more information about the Federal Reserve System, okay? Because this is a very straightforward, very intro level stuff, okay? But throughout the description or discussion of this system, I want you guys constantly asking yourself this question: is the Federal Reserve System part of the executive branch of the federal government? Okay. All right, now let's check this out. The system, on the top of the system, it's called the Board of Governors. Okay? These are 7 most important persons sitting on the top. They are appointed by the president. Okay? They're actually nominated by the president and needs to be approved by the Senate Finance Committee. All right, and once they are appointed, they are going to serve a 14-year term. Okay, now here comes the first question we're going to discuss during our virtual meeting. Why 14 years? Right? If it's appointed by the president term is only 4 years, right? If he or she is re-elected, then it's 8 years at most, right? Maximum. Why these board of governors, once they are appointed, they're going to serve 14 years. Okay. Here I can give you a hint. You may compare these with the Supreme Court justice. Okay, we know that the Supreme Court justice are lifetime appointment, right? Why we want to do that? What is the benefit of the lifetime appointment? So you may use the similar idea to understand why these 7 more members, the board members, are going to serve 14 years. Okay, and right below the board of governors, there are 12 regional banks, and this map shows you clearly which regional banks they are in their territory. Okay, and you would be able to find that here. For example, the black square represent the headquarters of these 12 regional banks. Okay, so for example, the Federal Reserve Bank of Chicago, it covers part of Wisconsin, Iowa, part of Illinois, and part of Indiana and Michigan, right? And you also see some red dots. These are the branch or additional offices, okay? Because as you can see, especially on the West Coast, okay, like Federal Reserve Bank of San Francisco covers a lot of huge territory, okay, including many states. So to reach out to provide a better service to local commercial banks, they also established some branch and additional offices, right? Now here I would like to leave 2 questions for you guys to think about, okay, which we will discuss again during our virtual meeting. The first one is, obviously you will be able to find more regional banks, Federal Reserve banks on the East Coast, okay, and on the West Coast again there's only one. All right, why is that? Okay, why it seems not evenly distributed across the country or across these states. Okay, and the second question is, if you take a closer look at the territory of these regional banks and the territory of states, you would find that Missouri as a state has 2 Federal Reserve banks, or at least the headquarters. Okay, the one is in Kansas City, Federal Reserve Bank of Kansas City. Remember, Kansas City is not in Kansas; it's in Missouri, right? And another one is a Federal Reserve Bank of St. Louis. Okay, why Missouri has 2 headquarters of Federal Reserve banks, regional banks? Okay. Now, for these 2 questions, I would encourage you to read the book and Google. Okay? You may find a lot of interesting stuff to read, to check out online.